Hello, everyone. My name is William Upper. I'm a client executive with Camaplan and would like to thank you all for joining us for today's presentation, Gov Tech, Incredible Value in America's hottest sector, with Dave Harden of Outpost Ventures. As a quick note, please be aware that Dave will be answering questions throughout this fireside chat and at the end of the presentation. However, feel free to use the chat and Q&A function on your screen whenever your questions cross your mind. Before we get started, we have a brief disclosure to go through. Everything presented in today's webinar is strictly for educational purposes. Camaplan is a neutral third-party administrator of IRAs. We are not attorneys, CPAs, or financial advisors. If it comes to a time where you need advice in any one of those fields, we highly recommend you consult with your team of professionals. We are more than happy to be a part of the dialogue with your team of professionals to make sure the investment process is quick and seamless. We do not sell any investments at Camaplan, nor do we endorse any product. We will never call you about the next best investment opportunity. We believe that you should always do your own due diligence before investing your money, whether it be your retirement funds or otherwise. Once you have found the investment that is right for you, we will help you open your account, fund that account, and facilitate the transaction into that investment. Here is my contact information if you or anyone that you know who you believe can benefit from the information have any questions about what is discussed in the presentation today and how it applies to self-direction, please do not hesitate to contact me. I would be more than happy to help. And without further ado, I'll pass it over to you, Dave.
Awesome. And are folks able to see me on camera? Are you able to switch to off presentation mode? Awesome. Well, great. Great to meet everyone today, I guess virtually. I'm live here at the Waldorf Astoria in Washington, D.C. I was just inside at a meeting actually with the IRS talking about venture capital and ways to do public-private partnerships. Also recently testified at the Senate about thinking about venture capital within what we're talking about today, which is this really hot rising class, especially during a tumultuous economy of government tech, or what we call dual use technology. So today we're just kind of doing a fireside chat, not really a death by PowerPoint. And so really just want to engage and talk about a few things with you all today, and then be available for questions and answers at the end. So look forward to having a conversation. If anybody has any inputs or questions along the way, that'd be great. I'd like to share some information and then be able to have kind of a lunch and learn kind of atmosphere here is the purpose. So appreciate the Camaplan team and what they do, the opportunity to speak today. And we've had really good success with understanding and folks investing through self-directed IRAs. So love what the team's doing here. As myself, I'm a C-17 pilot, so I was about 5,000 flying hours, 500 combat hours, turned business guy, turned investor, and most famously kind of built the Air Force's innovation arm known as AFWERX, so AFW ERX. It's pretty easy to find some information about me. Dave Harden, HARDEN. You could do a quick Google search and AFWERX, AFW ERX, and you'll kind of see what I did within the DoD to build what was really a mandate to think about how do we get the best tech to our nation. And so we're really passionate about that. And so we had to figure out how to work with heads of government and go through government contracts, figure out a bunch of things to do, set up innovation hubs in Vegas and Austin and DC, started a Shark Tank for the Air Force called Spark Tank. So had Mark Cuban and George Steinbrenner as judges, and fenced off $200 million to reinvent how small business could engage with the government. Also set up a matching funds program where it was a mechanism that private capital could come in with government dollars. And so nearly $5 billion of private capital has come in through that mechanism over the last 4 to 5 years, and has been really successful. So that's a little bit on my background. Today, we wanted to kind of talk about a couple things. One is venture capital as an asset class, especially during these times, and how it can be a good way to get great returns. And then a little bit of a niche conversation around a unique venture capital sector that some call Gov Tech or we call dual use technology, looking for technology and companies that have a good public sector application, something for the nation, and a good commercial sector plan as well. It's super hot right now, and we can talk about why, but there's some great opportunities here and for the coming, I would say 5 to 10 years within this sector. Most of you are here today, obviously, with your connection with Camaplan, and so you already know that you can use your IRA to invest in kind of non-traded assets. Based on our experience with self-directed IRAs, Ben Strub's on the line here too. He's our CFO, extensive experience with self-directed IRAs, and so we estimate probably roughly 45% of you are invested in real estate. Maybe 45% are invested in some kind of private equities, and then probably about 10% of you are invested in some other more maybe non-traded kind of assets. And so within that, let's say 45% of private equities, most are typically kind of maybe in angel investments into individual companies. IRA investment in venture funds isn't as common. But we're seeing more and more folks looking to diversify their portfolio. And so venture can play an opportunity for some great passive returns, especially in today's market climate. And, so I'll talk about that more in a bit. But first, I want to kind of talk about venture as an asset class. What does that mean? Because I know we have a varying audience on here. I kind of explained what I talked about that matching funds program and some of the stuff we get involved in, we were able to do really is around bringing investors in right before the government capital kind of gets a return or gets valued into a company. And so it's a really kind of a unique or interesting mechanism. And, you might be, part of maybe a REIT or, some kind of real estate play, which might have a yearly or quarterly dividends. Venture capital tends to be a little bit longer horizon, but tends to have outside gains in terms of multiples. So typically a little bit more risk, a lot more reward. However, with this kind of dual use technology and why it's so hot is because we're talking about government dollars at play that are non-dilutive. In other words, the government doesn't take equity. They don't take any position at all. It's simply revenue for the company for them to do better. It creates that risk reduction that you typically don't see in venture capital, and so that's why it's an exciting time to kind of be in this space. And so I kind of equated it. We've talked to some real estate folks a lot, obviously that they're in the space, and there's a saying kind of in the real estate environment, which is you get. You kind of get that, return when you buy a house, not when you sell it, right? You get that upside when you buy a house, not when you sell it. And the saying is that, you're getting good value and you're waiting for some time, you're trying to capture that value, but you're getting that discount kind of upfront by a good buying opportunity in the real estate market. And so similarly, what we do is kind of buy discounted companies. In other words, we know they're getting some money from the government that hasn't been factored in yet. So we're essentially buying discounted companies, just like you would buy discounted houses. And the reason is, why venture capital is kind of exciting, especially during this time period, is you're looking at 10x returns potentially instead of 10% returns. And so it's really an opportunity to diversify. And like I said, we've spent a lot of time kind of thinking about, what is that risk reduction? How do you kind of reduce that risk? It's interesting if you look at the data too. You look at, let's say 2008 to 2012. We can pick some other time periods kind of in history. The data shows that venture capital as an asset class gets 16.7% upside returns. The inverse is true for the S&P 500 or the NASDAQ during that tumultuous time period, typically losing 16 to 18%. So this makes this kind of almost the perfect time, if you will, with a little bit of undecided markets to invest in venture capital right now. And that's why We're seeing a lot of strong momentum and a lot of strong interest in these areas. Some of you might be super, familiar with venture capital, so I don't want to belabor the point, but I think it's worth maybe spending a little bit of time for maybe some of the folks on the line that aren't. So when a fund is set up, different than, hey, I'm investing in a particular company, what we see is something set up called a limited partnership. And so each investor who comes in as a partner to that fund, and then they're called limited partners. That fund then makes investments into individual companies. Like I mentioned, some of the areas that we have invested in or looked to invest in are things like, artificial intelligence. It could be, self-locking fasteners, robotics, hybrid electric airplanes. These are things that we're looking at and investing in, and the fund basically invests on behalf of the limited partners. And so typically they're sector focused, and they have certain stages that they're kind of looking at. Now, a typical venture capitalist has to make kind of 20 bets or invest in 20 companies, and they're hoping for 2 unicorns, right? We want outsized returns. We want to see, an IPO or the commercial markets kind of validated, and that's where a majority of the returns come from. In our case, in this kind of like growing dual use tech space, what we see is kind of, I'd say we're in the triples business is the way I describe it. And so what we're looking for is companies that already have revenue, already have government contracts, already have some kind of, product in the market. And they're simply taking that commercial viability and applying it to the government space and being able to scale and get additional resources and revenues from that government space. And so, typically you'll see in the venture capital space about 20% failure rate, sometimes up to 50% failure rate for the companies that are invested in. We see a lot less in the dual use tech space. And so that's why right now the risk reduction, it's a pretty hot space. So that kind of gives you a little bit of structure of the venture fund. Typically, they're set up, and it's the way we set up our funds as well, as what's called a 2 and 20. So the way it works is there's a kind of a 2% admin fee that's just administrative to kind of run the fund, and then it's an 80-20 split. So what that means is when one of the companies that are invested in exits, maybe they have a merger and acquisition, maybe they get recapitalized. However that kind of trigger happens, it's normally after a few years. So like I said, it's a little bit longer time horizon. So we're looking at, maybe 4 to 5 years. That exit occurs. And so the investor, the limited partner, gets their capital back to them. So that's great. And then any upside, is kind of a, 80-20 split. So overly simplistic, let's say you, invest $1 million, it winds up being 10x. You would get your $1 million back, and then that upside, $9 million, would be split 80% to the limited partner or yourself, and 20% to the general partners. So those are the folks kind of running the fund. So that's a typical kind of structure in the VC space. That's the way we operate with our funds as well. So that kind of hits a little bit on the venture capital as an asset piece. The next segment, I want to kind of talk about dual use technology a little bit more, dive a little deeper into understanding that space and what it means. But I want to kind of pause, open up the floor and see, any questions about just venture capital as an investment or an asset class, any Q&A kind of related to that. So give everyone an opportunity to kind of chime in. And Will, if you're able to help me with any questions that are getting asked.
Yeah, absolutely. I'd be more than happy to read any questions that come in. I see that people are still warming up their typing fingers, but I'm definitely interested in the next section when you start to talk about Gov Tech. I'm a little bit more familiar with just venture capital as a whole, but you said you had experiences, a good experience with self-directed IRAs and sort of the the allocation of investments to different categories. When you're working with self-directed IRAs and those investing in venture capital, have you seen any have you had any questions about due diligence when it comes to this for newcomers getting into that field that might differ from if somebody was looking into purchasing a real estate property or a general fund?
Yeah, obviously, I recommend, doing deep due diligence. Ultimately, you have to kind of believe in the thesis. We're, for us in particular, we're kind of very data driven. So, we sign kind of an NDA and then open up a data room and can point to, thousands of companies and the data that projects why the returns are estimated to be what they're going to be. So I think that's an important factor. Is to feel comfortable, obviously, with the people and the thesis at the end of the day. And so, those are important elements. And it's been interesting. We've had folks. The nice thing about the self-directed IRA is it really aligns well with the VC timeline. Typically, you've kind of maybe parked that money, you're thinking about it for retirement. And so getting returns or being able to roll it over in say 4 or 5 years or even 10 years, some venture funds are a longer timeline, really already aligns because psychologically you kind of already parked that money. So we had a gentleman, he had about 3 or 4, IRAs. And so we kind of helped, he kind of worked, with the company, consolidate those and kind of, get a coagulated $2 million amount. Was really interesting getting into kind of this space. Obviously didn't want to be in the business of picking the winners, right? And so really said, hey, a fund makes sense, right? You guys are the experts. You've been doing this for 10, 20 years. Here's, I want to invest. And then when I get the returns, being able to roll it over or, avoid those taxes are a big deal. We take a lot of effort in our investments and the way we think about the investments in the company, in particular around self-directed IRAs. And so, there's ERISA and other rules that pop up. And so when we invest, we're putting very specific things into our investment thesis or forcing the company we're investing in to change some practices. So on the back end, we avoid as much as possible any negative tax implications or triggers for, in particular, the self-directed IRA investors themselves. And so that's really important for us to think about. And some of the questions you all should ask as maybe you explore investing into this space.
That's great to hear for someone who is using a self-directed IRA and looking into investor, their knowledge of potential tax consequences or liabilities when it comes to that UBIT, UDFI. That just makes an investor more comfortable, from my experience as an investor and somebody who helps facilitate the transactions. We do have a question. I'm not sure if you've mentioned too much specifics about a fund that you're working with now, but a question from Stephen is asking, what are the investment limits for this fund? Is there a minimum, maximum? Is there any accreditation status that's required?
Oh yeah, that's a great question. So today was really kind of guided towards it being the lunch and learn. Obviously, this is what we do on a daily basis as well. So we have a fund, Outpost Ventures, that invests in this thesis in particular. And we have a $1 million minimum come directly in the fund. We have done a couple waivers down to as low as $250,000 to come in directly into the fund. So we can, have that conversation. We've also had some luck. We've put together kind of so we avoid having too many investors into the fund, kind of a small LLC. So, we have a group, in this case called TribeVest. They do, a company called Open Tribe. So they kind of do what we call a little TribeVest, which might be 5 or 6 folks. So if someone's like, hey, I don't have $1 million, but I have 100,000 I want to put in here. We can essentially put them together maybe with 4 or 5 folks. And that way it comes in as a single check into the fund. And they get their K1s distributed basically through that small LLC. So it's a way for us to bring in maybe some smaller investors, Will, and hopefully that answers Stephen's question.
Yeah.
Stephen, was that good for your question?
And thanks for the question, by the way, too, Stephen.
Yeah. Awesome. All right. Well, we'll move into kind of talking about some of the maybe cool tech out there and what we have. Okay, great. So what you see is kind of, since the 1950s and, a lot of tech came out of government into the commercial sector. And so it was about $3 to $4 of government money was spent for every dollar of commercial R&D that occurred. And over the decades, that basically has flipped. So today, almost $4 in R&D is spent in the commercial sector for every dollar within the government or within DoD. Yet those processes haven't really changed over time. And so what we're seeing is the government kind of awakening to that and saying, hey, we want to get better solutions in there. We want to get innovative tech. We want to figure out how to foster this environment. So they're slowly changing those one-way practices to two-way practices through public-private partnerships. And so the trend in the US, it's also a trend globally. We're asked a lot to think about these types of practices and processes for NATO and for international kind of ways to get tech for public good as quick as possible. So we kind of chuckle. We have a simple vision statement, which is do good, make money. And I think that really plays into this sector, which is we think getting ROI and capitalism for investors is really, really important. At the same time, we want to kind of do good and have a impact. And so there's kind of a patriotic element to this thinking. And so we see governments now courting small tech companies because some of the best tech is coming from them, and not just Silicon Valley. There's pockets in Austin and Minneapolis and even the Midwest, right? And so thinking about where these other hubs of stuff coming is huge. And we see globally, China has something called Mil-Sieve fusion, and they're able to rapidly through dictatorship be able to say, hey, that's a really good tech. Now we have access to it, or sponsor a lot of commercial technology. And so there's a much more seamless integration between the government, the Army, the PLA, and technology. And so we have to figure out a uniquely American way to approach that, because that is a real threat to I guess our way of life and our way of thinking and our grandchildren's way of life and our grandchildren's way of thinking. And so I have 4 kids myself, and so I'm constantly thinking about how can we do these public-private partnerships, something that's uniquely American to counteract that. And so dual-use technology has been it. And so as I mentioned, I successfully was able to set up what's called a matching funds program. And so this really incentivizes companies to pursue maybe government contracts, even though they haven't done that before, and a great opportunity for other VC funds and investors to get involved and maybe make a difference. I had dinner with a great group of folks, and they almost got emotional at the end, because a lot of times they might not have served in the military. They might not have had an opportunity to kind of make a difference for this nation. And so it was interesting. They almost got choked up because in a small way, you've been investing, $500,000, $1 million, and then being part of this journey, they could sit around kind of the dinner table and talk to their family about how this is making an impact, right? Why this is important, why we should be thinking about getting technology quicker to the nation, and that they play a little bit of role in that by mobilizing capital for the nation. So super rewarding to kind of be part of that journey, both on the government side and now on the commercial side. And it's really an interesting mechanism that incentivizes behavior. Super interesting. We're actually finalizing some due diligence on a company right now, but as a neurosurgeon, the neurosurgeon figured out that one of the big failure points for back surgeries was kind of implants around the fasteners and the joints and that type of stuff, which makes sense. Well, it turns out he has intellectual property or IP around self-locking fasteners or self-aligning. So if I'm putting a fastener in and maybe I'm at a 10 degree canter or something, as I'm setting that or screwing it in, actually self-aligns. The one, you don't have to go back and do it, so it saves a lot of kind of maintenance time. And also, I don't have it where it's not quite in right, or I have a gap, because that creates a, friction. It creates a failure earlier, creates moisture that could result in failure. Well, it turned out that his technology applied really, really well to airplanes and space vehicles. So super cool. He was able to get, actually, we have a proprietary accelerator that helps companies kind of get these government contracts. That's where we are able to kind of cherry pick some of our deals from. But he was able to get about 4 contracts, a few $1 million from the government, to look at applying this to airplanes. And so now he's on track to replace the fasteners on 440 KC-135s. These are tankers or refuelers. So think about like a Boeing plane, it's got a big stick out the back. They're able to give fuel to fighters and other aircraft, so they can do what's called mid-air refueling. So it allows planes to just keep flying without having to land at an airport and get fuel. So he has this opportunity now, and now they're in talks with like Airbus and Boeing. Some other companies are talking about, acquiring them. They're talking about rolling out fasteners across the oil industry, in addition to some of the aerospace industry as well. So we get to kind of see and be involved in these cool, what we call dual use technologies, right? And so, it's just a lot of different technology like that you think about that applied in a new way is kind of mind blowing. One of the things I was really passionate about when I was in AFWorks was female flight equipment. We really wanted to figure out how to help an underserved population within fighter pilots. And so, we were able to take all kinds of interesting technology and apply it in a totally new way to impact the ability for females in the Air Force to have better, flight equipment. And so what's awesome is kind of sitting at that intersection of capital and technology, and then the public kind of use space. And so it's been super rewarding. I love the, as you can see, we're super passionate about venture capital. We're super passionate about dual use technology, and it's really growing. Like I said, this matching funds apparatus has had nearly $5 billion of private capital go through it. Almost $9 billion of follow-on funding has come in from the private sector as a result of them participating in what's called AF Ventures, or the AFWorks program. And so I think you'll see a growing space occurring. You might have seen some growth in what was called social entrepreneurship. There was some growth a little bit around ESG. And so we see this as being a real trend for the next 5 to 10 years, something we can kind of capture and participate in. So I'll kind of pause there, Will, and I can take, the conversation a bunch of different directions, but again, would love to open it up here from the audience, answer any questions folks have.
Yeah, absolutely. Well, a question I have to start off with, out of curiosity, whether it be from an investor's perspective or someone in your position who's like, say, curating these deals. When it comes to Gov Tech versus consumer tech, is there more or less insight into the operations? I feel like it could go either way when you're doing your due diligence.
Yeah, that's a great question. I think, I mentioned the one gentleman is like, hey, I don't want to be the one schlepping through all this due diligence, right? Basically, I want to rely on, God, right? Because you have the experience, you have the stuff, right? And so I think we see that in a lot of investing, right? That's why you have RIAs and you have other folks that are kind of, looking out for your best interest. And I think this is a similar type of thing. The cool thing about us is typically a venture capitalist will have, I'll say 90 days, because they're looking through thousands of deals realistically. And so they have about 90 days to say, hey, do I like the team? Do I like the technology? Do I think this is going to convert, maybe commercially? Do I think the market's big enough, right? So you're looking at these types of things and you have to make a fairly quick decision. The nice thing in what we have is we have this kind of first right of refusal to this proprietary deal flow, because we're associated with a company called the Outpost, and the Outpost basically has helped close hundreds of millions of dollars for companies. And so they're designed to help these companies get through the government space. So in essence, it's kind of like paid due diligence, to be honest. We have this unique opportunity to see the companies kind of grow, understand how does the CEO react? Is the vice president of sales the right fit? Do they kind of do well in front of a government audience, or do they kind of stumble all over themselves in those situations? Are they able to kind of pivot and produce a decent product operationally to fit the product market fit for the government use case? And so normally that's happening over a couple of years, and so I would say we get much more insight and understanding into the verticals they're pursuing, how the team operates, to make an investment decision. So we really like having that bolted on to what we do, because we're not fighting for deal flow. We have the relationships, we understand the long due diligence, and I feel like we're making much more informed decisions in this space. To your point, if you're just coming in from the outside, it might be it's probably harder to decipher that, but we kind of have that unique lens looking at the due diligence of the individual companies that we're investing in.
Great. That's great to hear. We actually have a question coming in from an audience member, Tom. Is there a government entity or program that oversees these areas, or are there multiple agencies?
Yeah, great question, Tom. So primarily it was pioneered within the Air Force, and I helped pioneer that. So so within the Air Force, there's something called AF Ventures, AFVENTURES, that manages this particular matching funds program. And so that's kind of the Starlight case study, if you will. We are asked to talk about and help other organizations do that as well. So I know we're working, the Navy and the Army are looking to adding some programs as well, in addition to the federal agencies. So as I mentioned, I'm literally at the Waldorf right now, which is next door to the IRS headquarters building. And so I was just in there discussing with them, thinking about matching funds program for the IRS. There's something called the Inflation Reduction Act that has committed $80 billion to modernize the IRS. So something that's been underfunded for decades. It definitely it needs to occur. And so thinking about a pot of money that would act just like the Air Force set up as this matching fund. So a company comes in, a mission partner within the agency says, hey, I like this technology. We want to put that on contract for 4 years. This pot of money would essentially kind of like double that money, right? And so the other agencies are looking at setting up similar mechanisms, which is why we're seeing this as a hot trend item right now within the federal space.
Great. Thanks for the answer. Thanks for the question, Tom. Please put more questions in. We'd love to have them. And excuse me, this is very new to me, as I'm sure it is for a lot of people in the audience as well. When you go into government technology, I'm assuming there's subsections of that. Like, I'm sure you're partial to, with your experience in the Air Force, to avionics. Is there, robotics or AI that you tend to lean towards when you're going through these deals?
Yeah, that's a great question. Thanks for kind of teeing that up. I would say over the last 10 to 20 years, venture capitalists got very niche and specified. So you would see, them really dig into biotechnology and a very, deep kind of vertical within that. And so that was kind of the trend for a while. I think the trend now is looking at a broader array of technologies. And so for us, at least, our thesis is very tight around having this government component, but broader in terms of the technologies that are available. So recently, we have an opportunity to invest up to $10 million into a B round for a company that's out of Boston, VIA, which is an AI company. And so they were able to get this matching funds program, $30 million 4-year contract, looking at energy resiliency. So think about pulling data off of transformers at an energy company and then saying, hey, we think instead of just letting that transformer blow up, use case number one, which is very expensive because now I got to have a response team. I got to get the part out there. I got to, have that part, et cetera, et cetera. And now I'm pulling data all the time and saying, you know what, I think in 2 weeks, this transformer is going to go. So now on more of a routine schedule, I can send the maintenance team out. I can make sure I have the part in place. I could preventively even replace it at a lower cost and a more comfortable schedule. So that kind of preventative AI is something that we're heavily kind of experienced or involved with. And then thinking about the trend within EV and say, okay, as mission vehicles become electrified, how do you optimize when they get electrified and what that looks like? How does that compete with all the bases, resources, the backup generators as it relates to the electrical company? And so that falls into a category of kind of electric resiliency. And so, some of the AI companies that we're working with are looking at those types of electric resiliency and electric or power predictive maintenance as use cases or very practical use cases of AI. So those are some of the interesting areas that we see emerging, in addition to, small sat space vehicles, different ways of, laser technologies, robotics, even biomaterials for replacing runways or concrete. So they're pouring concrete, essentially a more bio-friendly material that replaces the strength of concrete without perhaps the negative impacts of concrete. So it's very interesting. The funnel winds up touching a lot of different areas and technologies that really almost any person can kind of dive into and get interested in. So hopefully I answered the question well.
No, that's
successfully.
That's great. That definitely piqued my interest. I definitely want to do more research into this after the fact as well. And to go off of that, already you're a wealth of knowledge, and I'm sure you guys have a lot more information. Do you guys have a website, any sort of resources that for people that are interested in getting started or learning more about this in their free time?
Well, yeah, thanks for asking. So outpostventures.com is our venture arm. So I just kind of put that in the chat if people want to go there. Obviously, you are more than welcome here. So I put my email, dave@outpostventures.com. Even happy to put, I know this is a small group here, so fireside chat. So, if you have specific things or want to text me, I want to put my phone number in there too, 202-815-5029. And Ben is on this call as well, our CFO. And so happy to put Ben's info in there as well. So outpostventures.com, dave@outpostventures.com, 202-815-5029. If anybody would want to reach out or have questions. And happy to get materials over on what we're doing in particular within this sector.
Great, thank you, and thanks for reading it out as well for people that might be watching the recording when we send this out. I'm going to give people some last chances to get some questions in for Dave. Is there anything you're working on in particular right now that you want to talk about, that you're particularly excited about, or leave that for people to reach out and get more information about?
Yeah, great question. Like I said, we just did first close on our current fund, Outpost Ventures. We'll be raising for the next 10 months, $120 million fund. So if folks are looking or are interested in VC as an asset class, and particularly this hotter space of, I'd say, dual use technology or government tech, love to chat to folks about it. We're it's just a fun space to be in. I'm actually flying to Indianapolis this weekend. So we have a relationship with Marissa Andretti. If anyone knows the famous driver, Mario Andretti of Andretti Racing. So this is his daughter. And we have a really interesting battery company that, is in due diligence right now to look at for investment. So we're looking at, helping. I mean, part of what we do is kind of be that strategic partner. So not only investing, but helping connect. And so, we're helping them potentially put a multi-million-dollar deal together with Andretti. So I'll be in Indianapolis this weekend, doing that kind of stuff. I think it's an exciting time and we get to do cool stuff. And so, super passionate about it and happy to, open up some of these types of opportunities for folks that maybe don't have access to this type of investing.
Wow, sounds very exciting. Look forward to hear more about that. We have another question coming in from Tom as well. So the VC makes the initial the initial investment, excuse me, and how's the return realized? Or it's driven by a need and then you fund the need? I'm not sure if
Yes, we have a pipeline of deals. And so this first year, we have capital coming in and we're deploying capital in investments. The second year will be just a capital deployment window into these matching funds kind of programs. So for example, I'll use, I guess, our most recent investment into Electra, .aero. In that investment, we'll do a capital call for our LPs. If it's smaller amounts, you'll just kind of invest right away. Some of the larger ones we can capital call over a time period. In this particular one, we invested in their end of their A round. So Lockheed Ventures was coming in also as a $65 million pre-money deal. So we came in with our investment. They'll go back out, and this was before they're getting that $30 million chunk, from the government over the next 4 years. That hasn't been factored in. So we get an immediate IRR bump, which is kind of cool. So they'll go back out with UBS Credit Suisse, let's say within the next 6 months, probably at 180 to $200 million valuation. So that means their B round we'll get kind of a 2x to 3x bump in our investment or our investors' return. And then it'll probably be another 2 years after that where they would go for their C round. We look to capture a portion of a company's life cycle. So we came in at the tail end of the A. We'll go through probably the B round for the fundraise. And then the C round, we would look to exit our investors. So typically at the C round, institutionals are coming in, some larger checks like that. And we would look to take out our investors at that point. So we typically don't wait for like an IPO or commercial exit. Within 4 years, we'll look for either a merger and acquisition, which will be the trigger for the returns, or we'll look to get taken out basically by another investor in that round. As soon as that happens, that triggers all the returns for the investor. And so they get their capital back, and then they get an 80-20 pro rata on whatever upside has been created as a result of that exit trigger.
Great, thank you for that clarification. And this is public information or something, but that's behind the scenes? This is another question. Yeah,
it is public information. I think you can go on and see us as an investor. Obviously, if folks ask for information for Ben, we're happy to share that the most recent investment we made in Electra.
Thank you for that. And thanks for the questions, Tom. We have another question from Barbara. What is the typical length of time for an investment?
So typically with venture capital, there's kind of a bounded time window. And those windows are typically longer than the returns just because there's its own kind of life cycle. So a typical VC fund's about 10 years. Our particular fund's a little bit shorter, which is 8 years. You can have some trailing returns in kind of the out years. So that's why the fund life's a little bit longer. We specifically look to reduce that timeline and IRR. So typically $1 invested today, you'll start to see returns in 4 years. And so you get kind of paid out in year 4, 5, 6, 7, and then you'll start to have some trailing returns on the years. But the majority of both your capital and returns will kind of be in that window between, year 4 and 7.
Perfect. Thank you for the answer. Thank you for the question, Barbara. One question on my end. You talked about it initially towards the beginning of the presentation when the minimums were mentioned. You said for people that may not be able to meet those minimums from one specific entity, there are options for people to use a company that offers a special purpose vehicle to do that. Can you give me more information about how that works? Is that a general vehicle that are added, or do you have to find the people yourselves that want to be put into this vehicle to combine that capital, or how does that work?
Yeah, great question. So we have a relationship with the mechanism. So I think we've on maybe our third one now. And so typically, like we have one or two people now. So if there's some interest, from the kind of Cama Plan group, we could potentially add them. And then we would look at, let's say, closing one out at the end of August. And so that could be a group of like 5 or 6 people. So literally they open up just a very specific LLC. The admin company kind of manages everything. Has to be an accredited investor, obviously. So you have to have kind of that accreditation letter. You kind of sign the operating agreement, and then they're able to put that money in, and then that comes in as a single check into the fund. You still have access to all our quarterly updates, just as if you invested $1 million check, but it'll just be kind of managed through that mechanism.
Oh, great. So it just gives people more of an option. And you guys are more flexible with that. Another question just came in. Would you have a seat at the program management table? I'm not quite sure what that means, to be honest.
Sounds like somebody that maybe knows government stuff a little bit. So the answer is typically our funnel comes out of the Outpost. I kind of talked about that as our proprietary deal flow. And so that team sits at the program management offices, the Pentagon, and a bunch of other places to help, in particular, the companies. So obviously, because of the decades of service as a retired colonel, plus what I did for the Air Force, obviously we have our own direct relationships that we're able to leverage, and then we rely on a team of folks that do have access to the different program management offices, or the PMOs, which I think the question was referencing.
Perfect. Thank you. It looks like the questions are winding down, but I want to just to reiterate for people that are here now or maybe watching this recording in the future, any questions that you might have that you couldn't think of now, outpostventures.com, Dave or Ben at outpostventures.com, and 202-815-5029 if you want more information. And if you have any questions about how this applies to your self-directed IRA, please feel free to reach out to me at camaplan.com or my email wmucker@camaplan.com. And I want to thank you, Dave, for all the information you provided, a lot of insight. I know you seem like you're very busy, so I appreciate you lending your time to us. Is there anything you want to close off on before we end the presentation?
No, I love it. We're looking for patriotic LPs. We think venture capital is a great asset class, and the Gov Tech sector is hot right now. So if folks that maybe are real estate or maybe haven't thought about it, thinking about it, or if we can be a resource to answer questions. We're headquartered in Alexandria, Virginia, right on the water in Old Town. So if anybody's in the DC area would like to stop by and have a coffee or a drink and talk about it, that'd be great. And of course, our thanks to Carl and you, Will, from Cama Plan. So it's great to have a good partnership. We have several investors that reach out to us that do have IRAs, and we say, hey, you can pick up a phone directly with a real human, and they can walk you through and quickly fill out those forms and get that self-directed IRA going. So it's great to have a relationship with a great company like yours. So we appreciate the opportunity to kind of share with the audience today.
Thank you for that, Dave, and thank you for everybody who attended and anybody who's watching this in the future. I hope Dave and thank you, Ben, as well. I hope you all have a great rest of your day, and thank you.
Awesome. Cheers. Have a great day, all.